Hello, everyone. It's Shooter. Hey, we're going to go over primary waves. Of course, at the end of the presentation, please do review our disclosures. Okay, I published the Magnificent Seven report last week. Pretty much was on target. We had follow through pretty much through the rest of the week. Now, Amazon, I like this to the upside. I mean, this is a good recovery. We had noted to take partials on any short positions around 118. Just shallow on trend support. That's bullish to me. Went right to the 8-day and we just have continued ever since. So I would expect a little rejection here at this 8-day resistance, right here where our B was. So maybe we get up here and pull back a little bit. Could come all the way back to the 200-day and still wouldn't have done anything wrong. Then I think we grind into the holiday season unless we start hearing a lot of news that the consumers are drying up, because we went from a couple of weeks ago where, hey, the consumers are at risk, and this past week, oh, consumers are fine. So, that status quo, I think Amazon is contingent on sales, and my understanding is their numbers are not horrific. So our next target is up around 180. So we got quite a little bit of room for here. So, I would think about selling maybe 130, 125 puts, be a little conservative on those. And once we back test this 8-day, whatever our back test is, I wouldn't hesitate at the money or $1 or $2 in the money, go out to either do the monthlies or twice a week and just, buy some calls, small number, to add towards your book, because, right now, we've had this rotation into certain Magnificent Seven names. And after this kind of drawdown, this flat afterwards, it looks real bullish. I think we're going to come in and test, 200 at some point next year. That's just my thought. All right, let's take a look at Microsoft. Now, all-time highs. This one, actually, I've had it wrong a couple times. But, hey, nobody's perfect. The idea is to understand when you're wrong and then get on the right side of the trade. And that's what we're trying to do here. We got a nice breakout. So next entry long would be at 362.18, so a little lower than where we are. And then we're only going to be looking for maybe 390. Now, I would have liked Square to get a little bit more of a pump with Bitcoin, but we still have a nice base here. Realize we had a primary wave failure here. We overshot it, put it in a new primary wave. And, now we're putting in really a reset because it's just a tad bit lower than the initial thought. Now, I also have a ghost print down at 1388. Now, let me explain what ghost prints are. Basically, I run these counts, and, once I've done my full analysis, it's hit my sheet. I'm comfortable. It meets all my conditions for a primary wave setup. And then the count changes over the next couple of days or next couple of weeks or whatever it might be. So then that becomes a ghost print. And the reason I put ghost prints on the chart is because we want to know where those spots were, because quite often, if we see failure, like we see rejection at the 8-day, then I look at this, or shallower or lower high, a little bit below there, then, I would be looking for a back test maybe to that 1388 or 68 or whatever that number is, because I can barely see it on my screen. But that's just my thought. So, hey, Square, I think we're good to the intermediate wave. I don't know how long it's going to take us to get here, because, we got to have a recovery in small cap, small business type companies, a lot of what's in the Russells. It could be 6, 10, 12 months before we get back up to 105 from where we are. It could be a little bit longer than that, actually. So I would target the 50-day, which is a good little spot, about $63. So selling some puts is probably a good idea, or right at the money. And again, my strategy in this market with the volatility is really simple. Buy the monthly or buy the weekly calls 2 weeks out. Just shallow, right at the money. All you're trying to do is make a couple bucks on them. If we continue and, we get a back test, buy a couple calls. Get another back test, buy a couple calls. Then once that's been successful to the upside, then you can add to your cash secured puts if you want to. That's sort of the thought pattern with that. But I don't want to go too far out. I really don't like buying options 3 months out in this market, because we've been flipping around too much. Rotation from one sector to another sector, and you're losing your positions in 6 weeks. So we want to stay within that 6-week box or less, where we know we can get some premium. I'd rather be right 70% of the time and make a little money than be wrong 50% of the time and wipe out any gains that we have. So that is, I'm just being strategic in my thought pattern. And of course, we sort of bring everybody up to speed on that in the rare chat room. For anyone who's not in there, sometimes we're real busy in there, which I think we're going to get real busy, at least before I bail for the holidays, because right up to Thanksgiving is usually good trading. So, however, just keep in mind, my father is now in hospice. He's 87. So I'm going to be spending as much time as I can with him, through the end of this year. But looking at Google, we're looking at, we got our target one or just a little shallow. Again, that's a bullish look for me. When we start getting shallow prints above a bearish count, that becomes, in other words, the tape is getting bullish, leaning bullish. So breadth is more than likely bullish on that symbol just because of that when I look at my chart. So we're looking for a decent number on Google, 157. Like I said, I believe that it was oversold on the cloud factor as far as earnings. I think it was only 6% of their book. But, what did we lose? We had, we lost $20. We were at $1.40. To me, it was significant. Was that worth $3 to $5? Yeah, probably. Not $20 though, in my opinion. So I think we're going to recover pretty quickly. So, I would stay fairly tight. You probably could do 127, 128 puts, cash secured puts, or stagger them depending on how big of an account you have. Most of the people I think in our room are in the block of, a position size around 15 to 25K is sort of my thought, if you use a standard allocation scheme. So, but typically 3 to 5% is your max position size is 5. And the only time that I'm going to go over that is with something like Bitcoin right at the moment in this run. And I want to be up closer to a 10% position size there. And I'm even pushing it a little bit. But, looking to the upside here, maybe a 157 on Google. All right, let's take a look at Apple. Again, we're back above the original breakout line. So, we're going to come back up here and test all-time highs. I think 213. So, hey, January 2025, $200 strike might be worth the money. So sell maybe the 50-day 165 puts. Okay, I wouldn't even have a problem with selling July Apple 165 put. Okay, just make sure you run a trailing stop on that. So if it gets to the point where you're losing 25% of your premium on those, I would be out if the market turns against you. Just manage it because I do think Apple print going into the holiday. We've now gotten this run after they delayed the next iPhone. So that's constructive for me. I think it has the upside, this could be extended. Realize our wave 1 is this long. So wave 3 could be all the way up here to 61.8. And I think if we have a decent push into the holiday season, Apple is one of the names that can run because we've been in this base so long. We've been in this consolidation, and we've already tested it once, came back right to the 50-day. The 50-day held, and boom, we were gone. So that's my thought. All right, looking at SHOP. We were in this little flat here, maybe a little bit lower to 45.50, and then we had a little bit higher. So a little bit of time, on this still. So we're around 61. But I do think it manifests shortly, and I want to get everybody thinking about SHOP with the holidays because I think the numbers are going to be good that come out, next quarter. So of course, from the position trade standpoint, this is one of the stocks I think that has a decent shot of recovering. And, 50% back to me is 110 from 61. So I would say second or third quarter 2024, that's what we're looking at as far as a target if we don't get there before that. All right, just going to cover STAG. Now, again, in this flat, we got our initial breakout. If you have covered calls still on this, you probably can trim them once we get above. I wish I could pop this out on my screen so I can actually see it. Maybe 36. If we get above 36, I'd clear out the covered calls. Otherwise, just let them ride at the moment because of this little doohickey thing down here in the Fibonacci Bollinger Bands, the standard deviations on the Bollinger Band with the Fib extensions basically that gives us standard is turning a little bit lower. So I didn't like that, but the main reason it's turning is because of this move. And yet we get the wick to the upside on this little move on this candle. So I think it's a little indecisive, which I'm suggesting if you still have covered calls, maybe hold them until we get above that 36. Now looking at Tesla. It's a hot mess, still a hot mess. Except for I really was drilling down, I spent a little bit of time just catching up on stuff, not really catching up stuff. I read stuff all the time. But this $25,000 car really caught my attention. I've always been a believer in a low-cost producer scenario. And Musk is a smart guy. And, I guess China, Germany, and Texas, maybe even Mexico, are going to build those 25,000. They're tooling up for it, I guess. And I heard a number somewhere around 5 million cars a year on that low number. That is just going to realize that if a consumer can go buy a new Tesla EV, and have a similar type of quality to what we've received already in the Tesla, I think it has some huge upside. So I'm just trying to make sure we keep some kind of position on here. The downside here is I do think there's a shot that we back test January 23 support, 169, even though we have a primary with shallow, right? We have no trigger. We're just talking about this, as far as cash secured puts. I think you're safe, but if they get taken out, I don't think it's a bad spot to own it here with a 124 number. So if it does go below 180, and you end up buying another lot, 155 or 160, your cost average is not going to be bad. And maybe the third lot comes in around 145 if we continue lower. I would have rather this been lower. We broke below our trend support line that was here. So this to me looks like an overshoot. So drive 1, drive 2, drive 3, boom. Hey, so I think that 500 is viable. Now, whether that happens in 24, 25, or 26, I don't know. But 14 months is the timeline for those $25,000 cars. I think that's big. On top of that, the EV charging stations have become the largest EV charging business in America. And we have no income really that is coming in from the autonomous. We do have income. They're including it in the value of the Tesla. So, even on those $25,000 cars, and realize, I think that's taxi time. I think that's, where we're going to have autonomous vehicles, that robo-taxi. And, obviously, some of my other videos, I've addressed Uber and Lyft, as far as my thought patterns there as well. So, but I just want to keep Tesla on your radar. I think this becomes a major play, the upside, and considering the flight to quality in the Magnificent Seven, this has the most upside of any of them right here. So obviously manage your risk, but I think we do need to start building a position trade to the long side if you don't have one. Okay, look at Generac. It's primary waves held. This is a counter trend trade. You don't see a lot of these for me, at least in the bullish sector. I'm going to try and trade the 50% back to the downside, counter trend. All right. So what's ultimately happening here is you got an ABC. This is A, B, and then we're going to get a C. Now, equality for C is way the heck down around $25. So if we do not get above this 8-day, this will probably morph into a 5-wave to the downside. So the close below $86 on a weekly chart would get me to trim to a half a position and let me see where we land, and then reassess and continue to build from there. I still think this holds. I think their business is pretty solid. Sales have been consistent. If you look at earnings, so I do think that 350 is viable. I would not be buying too many calls at the money on this. I think only cash secured puts, looking around 90, $85 maybe. Just stay conservative. If you do get them bought, you put to you there, I think you're in a better position. All right, let's cover a couple ETFs. Now, A1 Asia 50 ETF, we have a primary wave setup coming at 53.24. We have no triggers here. Now, those of you who don't know the trading strategy that I've developed, it's called a primary wave setup. Ultimately, it's based on Elliott wave theory. Okay, so we need a crossroads, which is an intersection of different wave degrees, which are based on time frames. These little color labels that I have, purple is a super cycle, blue is a cycle, green is a primary wave. What I've learned is that at these intersections, that is a great place to pick a top. And then at these intersections, it's a great place to pick a bottom. Now, the qualification for a primary wave is a primary wave degree or above, and at least two waves intersect at that intersection. That's the basic criteria that we have. Now, During a trending market, that can stick with us for, maybe as much as 75, 80% of the time. During a non-trending market where we're in this chop flat like we are now, we're struggling around 65%. But we can see when we're wrong. So that's just when you have to step in and manage your position. Understand when we are wrong, what would make us wrong. For example, in this case with A1A, we have an original primary wave setup. So as long as that setup does not break, so we do not close below 44.42, this uptrend is intact. Okay. So if it breaks below that, then at that point we trim to a half a position. It depends on where you enter. Typically the way the primary wave setup is, we have alerts on a 90-minute, a daily, and a weekly time frame. And those triggers blow, which basically it's where this moving average crosses, right? So this is a weekly trigger, basically 90, daily, weekly, and then the breakout line, which is marked by this blue line. So at this blue line, you want a full position on. So that's the idea. So if you came in at the 90-minute, the daily, and the weekly, and you had a full position on here, and boom, we went up here, and we know as soon as we have the wave count, we would be able to see this, just like we can see these counts, right? And at that point, if you're following my charts, you're going to see that I'm going to say target 1, target 2. I'm going to highlight them, sometimes target 3, sometimes I show 3. But ultimately what I'm saying is if you buy at 53, your ultimate target is 90. At 90, you want to sell some covered calls or trim and then add something back at 76, depending on whether this is a position trade or a swing. All right, so A1A looks decent off that 53 for about 90 bucks. All right, let's look at Wisdom Tree Emerging Markets. Now, we overshot the next entry I put out. Matter of fact, I think it was 3 weeks ago, maybe. Might even been 4 weeks, might even been a month ago. Not recalling specifically. Now, whenever you see this second, third, and fourth entry, what that is I've thrown up Bollinger Bands with Fibonacci extensions, which basically is one standard deviation, 2, 3, etc. And, at that point, what I don't like is the breadth of that Bollinger Band. In other words, it potentially could squeeze a little bit more to the downside, all right, which is why these entries are here. What I'm telling you is in your position size, if you're going to enter at 46, you want to think about, if your position size is 5%, right? You want to take 25% and assume you're, at 43, another 5%. Another 0.25% of that at 42%, $41, another 0.25% of that at 41. So you're scaling in, so you can put in your good to cancel orders on common shares and say, hey, I'd like this back around 44, 43, 42, 41. And then when they roll off, if you didn't get filled on those positions, take them off. But DGS, Wisdom Tree, emerging markets, small caps, we're looking for maybe 61 bucks off of this low. Whether or not we put in our low or have put in our low, or this is our low or that is our low, it will not change the upside. It won't. Sometimes if it's euphoric enough to the downside, it expands the upside. And the reason for that is because FOMO, okay, people have this fear of missing out on one. And on highs, people have this fear of loss. And it's measured by Elliott Wave, which I think it's a fabulous tool. I highly recommend you learn more about it if you don't. And we do or try to do a weekly Q&A session on Wednesdays, which is usually posted within the free section of Fundamental Trends for those of you who haven't joined. And then let's take a look at EWA. Again, we had our original primary wave setup. Next entry overshot a little bit, so our second entry is maybe 20 bucks, 18 bucks. But it looks to me like it's pretty much done at the moment or close to it, and then we should target about 37. Now let's look at Permian Resources. Now I've got this as, possibly top or sell. Reason is we got 2 drives, pretty aggressive 2 drive. Didn't have anything here, really not much of a topping pattern. This is the beginning of the leg. So this whole structure here, this is leg 1, that's the top. So we should get a back test. Now, whether or not that back test happens up here at $17 or at $16, I don't know. A lot of chop right here in the market. Oil is heavy with the production that's going on in China. I don't know exactly how that's going to affect the Permian Basin or Permian Resources. But at this point, it looks to me like it pulls back a little bit. So if you have a position, I would probably be trimming or selling covered calls just above 16 bucks, maybe $18, $19 or 20, depending on what options they have available. I have not looked to go into more detail. Now, BRK.B has been on our covered call list for a while. We're putting in a B. We're going back to C. So we were shallow, never got to my target of 328.10. So you guys probably still have some covered calls. At this point, don't worry about it. I think it's going to head to the downside a little bit more. We've got an inside bar last week, so that indicates a directional change for me. But maybe 326, you could sell some cash secured puts if you don't. And that also is your next entry long if you don't have one. And ultimately, we're looking for 386.57. Now, let's look at PLTR. Now, I just can't find a technical reason why to get bullish. However, we got the FOMO, we got the commercials in it, and we got the flow, but we don't have the count. Right now, we've been pushing on this count consistently. This is our third uptick, I believe, but this is a 5-wave impulse measured down, okay? So, this is the intermediate wave. Our 3 is down here at 9.6. So when this trend support breaks here, which will be, depending on how soon, if the candle around 16.50, that would be when I would be out of my positions long. So up here around 20 bucks, maybe I sell some 25 covered calls, and I'm giving some room because it's pushed. So I'm trying to keep you guys in it, but at the same time, it's going to flip over. I don't, there's got to be something, there has to be a catalyst for this count to change or flip, but it can't. Realize every Elliott wave is an intercept. It's really, I call it user error, but I want to understand what are the outcomes. And the only real outcome is that the whole wave flipped to the up, and this, somehow or another, the 2 moves up here, which could be the case. I mean, as far as how Elliott waves are counted or calculated, specific things need to occur for a wave to flip bullish. And I'll use XRP as an example. I'm going to just give you a little teaser here. I went long this weekend on XRP. Reason I hadn't gone long, well, I did go long off the initial news. We were thinking that they would win the court case, and we paid like 42 cents and sold around 70, 68, right around that range. So we exited those. And so we're holding XRP now. But the reason we bought XRP is because the count then supported my thesis of what I was seeing in my reviews on a day-to-day basis or weekly. That was my thought. So the count could flip and go north. So that's one reason I'm giving us room on the covered calls. But at the same time, it also gets you positioned when it does turn lower, so you at least have some revenue coming in, so you can make a decision on whether or not you hold those common shares or not, if you're holding. All right, let's cover Paramount. I don't see this breaking down. To me, I look at this as a 3. Drive 1, 2, 3, and it could come all the way back. However, I just don't see it with this look. So this is leg 1, this is leg 2. I'm thinking we get a whole leg 3 down here, a little bit lower. And realize this is target 1 at 506. That's a 3, a 4, and then our primary wave 5 is off this chart. So it's way the heck down there. That's my thought. So if you're holding Paramount, it might be a good idea to sell some covered calls. Kirk really likes this for a buyout, I believe, if I'm remembering correctly. Recall is good today. Maybe right, maybe wrong. All right, look at PLD. I think we break down at this 109, head back towards about 92. So, either trim or sell some covered calls, or even buy some puts. Now this is wave 3. Wave 4 is what we're going to put in at 109. Then we're going to come back and put wave 5 at 92. Then that's our primary wave 3, which is going to push to primary wave 4, which is back at 109. So we're going to go bing up here, bing, and then we keep going low. So, the thought pattern is that, if this low hold, then we could bounce and the count could flip to the bullish side. And there is a possibility the count flips to the bullish side because we've sort of held this band. But it is a bearish looking band. It's not bullish, in my opinion. It does not get bullish until we put in a higher high above this B. So we need to get above here, maybe to the 61.8. So we have to do an awful lot from down here at 106 to get back up towards 140. That's just my thought. All right, looking at Nvidia. This is on a cliff. Now, rumor has it that the news about China is true. However, we have not heard that the State Department is going to believe it or agree with it, and that the chip is going to be suitable for their restriction. So sometimes Elliott Wave sees news events in advance. My bias would be at 492 to take profits, then be really conservative and sell some 250 put. That's my thought. Strategic here. I love this stock. However, it's very difficult to trade. You could hold and buy puts. You could hold and buy some puts just to insulate. I wouldn't do more than 3, 5, 8%. You came in and bought Nvidia at $150 a share. So you've got a nice gain up here at $490. I would subtract $1.50 from $490 and say, this is my gross profit. And I'm talking 3, 5, 8% of that figure. So your gain. So calculate your puts from the percentage of your gain. And it's really just a hedge. But the reality is that could end up being, we go back down to 258. If you bought, let's say, for example, 350 puts and it manifests and we print a 258, those are going to be worth 3, 4, 5x. Below the 8-day here, really the 382, I would be trimming at least, and I would probably think about covering, barring any tax implications. Again, I don't know what your tax implications are. So again, this is not specific investment advice based on your condition because I don't know that. This is how I would trade it if I was in that. Let's look at sticky properties, I believe. PPTYS might mean something else, actually. But we're looking at our minute wave 2. Then we should bounce down to our 3 and then go to our 4. So next entry short should be about 29, which is right about where we are. So, 20, what is that going to be? $26, so $1.50 lower. I don't know that I'd necessarily chase puts here. I'd wait till it gets up here and we know it's going to get rejected. See some kind of rejection, see what our RSI looks there. But that's a good run back down to 19, $10 lower on that, if that does occur. However, for those of you who are holding a position in this, covered calls are a good idea at 29.08. Maybe sell $30 calls, 32, 35, whatever's available in options. I have not looked. Well, folks, this is what I've got for this weekend. Great trading. Until next time.